Good morning, traders. It's Tuesday, February the 4th. Taking a look at the charts, we've got our 30-minute trend analysis chart on the left, regular trading hours only. This is the SP 500, and then we've got the daily chart of the SP 500. And if we look at the price action, let's just zoom in on the daily here. We've got the big price action going on this week, which is to be expected. Last week, big drop and a big bounce and another big drop. Very volatile market over the last 8 or so trading sessions. Yesterday was a pretty big pop. Today we got another big rally up 1.3%, 1.6% on the NASDAQ. We're getting right back up to the upper end of this range. Both our momentum and short-term cycles are going to be hitting this upper reversal zone or overbought kind of market territory. Our pink cycle is down. It is going to turn up today, but it is below this red line, which means we are still struggling and we're in a potential downtrend still here. Now, if we look over at our trend analysis chart on the left, the market is set, you can see here at 32.88. If we look over here, 32.88 happens to be right where our overbought market condition is. It's also this high here. It's also this high here. And it's hard to see it, but there was a sell-off here, a couple bars, and a rebound back up. It is right through this noise as well. So we've bounced back up, and we're at a resistance area. The market's going to open at an overbought territory. We're going to have a big gap here. As we know, the stock market gaps tend to get filled eventually, sometimes the same day, sometimes a couple days, depending on how strong of a rally it is. Sometimes you get a gap and go where the market keeps going. It might not fill for weeks later, but in most cases, gaps fill within a couple days. So we are set to have a big gap up into resistance with short-term cycles topping out, and we'll see how things shake out today. Now, last time we had this big, strong rebound. It doesn't look like much on this chart because we got big volatility, but we had this huge rally a few trading sessions ago, very strong move to the upside, and it closed relatively strong on the session, and then the next day it gapped lower, sold off, and closed down near the low. So we could get something very similar to that again, where the market rallies up. And if we take a look at the SP 500, let's go back, look at a previous type of price action like this. This is the type of price action we are getting into right over here, and during this time, this is when we actually saw the stock market traded sideways in volatility, where it bounces up, sells off, bounces back up into resistance, which this is more or less something like this, or this over here is where we are over here, where the market has sold off, we've bounced back up, and we can very easily see this chop around over here. And during this time, when the stock market trades sideways, it's pretty hard to catch these drops, but as the market chops sideways, this is when bond prices actually just keep rising up, and they actually do exceptionally well while the stock market trades sideways. And that's today we're going to see bonds gap down fairly substantially because money's piling into equities today. But if we hit resistance on equities and selling steps in, bonds have already moved up really nicely for us. We already have hit our first small target, moved our stop to break even in case the market flips on us. But overall, if the stock market starts to sell off and trade sideways here for, who knows, another few days or a couple of weeks, bonds should continue to move higher and hit some more of our targets to the upside. And that's what happened over here. We actually saw bonds move up very substantially, and they held up very well even when the market started to kind of come out of these levels. And that's where we're at, this sideways price range. A lot of people get short the markets, but we are in a bull market, so it's hard to get short because the market dives in 2 or 3 days, the sell-off is done, and then it's just sideways chatter. And it's hard to short the market because it's just trading sideways. So the kind of safer play here is to get long something like a risk off and watch bonds climb their way higher as the worry, the fear kind of creeps into the market. And eventually, if the market breaks to the upside, that's when we're going to get a signal to get long the equities. We'll also have a signal to get out of bonds, and they'll flip directions and we'll flip positions. So that's kind of where we're at this point. It's going to be a volatile week. We knew this last week. We talked about it on yesterday morning. More or less, we're expecting a really volatile week and price to chop around. Let's take a look over at bonds, down 0.75%. You can see we've had a very nice move to the upside. We've caught this, and now it's having its first kind of significant pullback. Let's just zoom in a little bit more here. We are down below the 5-day moving average. We could very easily see this pull back and flag out a little bit depending on what the stock market does, but overall it is a little bit overbought. If we go to our trend analysis chart, um, go up here, you can see this red hashtag. This is bonds, TLT, 20-year Treasury bond ETF. We're trading up at this overbought territory. And so overall, you can see we had a big move down. It bounced back up. It's showing signs of some weakness, like it needs a breather. And we're probably going to see this consolidate a little bit. And then hopefully we'll see it take off again going forward. The equities market, this is the SPY, the SP 500 index. We have the oversold market condition. We had our cycle bottoming out there when the market closed down at these lows, and more or less the market bounced yesterday, and they are set to bounce today and go all the way from this oversold level 2 days ago to a rally, a bull flag, and the second half of that move into resistance. And it's amazing how the market moves like this. Once you know how to identify these levels and understand that patterns and Fibonacci measured moves, the market becomes really interesting to watch how it unfolds and how it can be fairly predictable going forward. Now, if we look at gold miners, they are showing some signs of weakness as well in terms of they've had a big rally, they had a sell-off, they had another kind of grind rally into this overbought territory here, and then we saw it move down. Yesterday put in a little bit of a pause and a kind of a dead cat bounce off this support level. It got oversold at this point here, and we got this bounce. Today, we're going to see them move down, and we could start to flirt with this oversold level and the 20-day moving average, and maybe they're going to have a deeper correction going forward. It all depends on what the equities markets are going to do here at resistance. Are they going to rip to the upside, hold their ground, and just muscle their way up and continue in this bull market, or are they going to flip back down with another big wave of selling? And all today's move is, or this week's move in metals and bonds, is simply a consolidation, and they're reloaded and they'll be ready for a much larger run going forward if the equities market rolls over. So that's kind of where we are in terms of those three core markets. This is gold, not gold miners, but they move fairly similar. Gold miners obviously underperforming gold at this point, but they still have similar type of price action. Looking over at energies, natural gas up 1.3% this morning. Let's just pull up UNG. It should be trading. UNG is trading above our stop. If we ever just pull up the 10-minute chart showing pre-market trading, the market closed a couple pennies below our stop yesterday, and so we got sent the alert out after the close that today at the open you can set your stop, put a hard stop in at 14.23. If price falls down to 14.23 at this point or opens below it, you just get closed out of the play. If not, you're in this play, and this could potentially continue to move higher, and the play here could be saved. So we'll see how things shake out, but overall natural gas is set to UNG to open higher above our stop, and we'll see how things shake out over the next session there. Looking over at crude, up 2.4%. It's got this continued volatility, but high velocity to the downside. We're staying below this 5-day moving average. Big down day yesterday. Today we're getting a rebound back up to this the 5-day moving average. More or less, all the cycles really got oversold yesterday. We had 3 of our cycles bottoming out, and today we're getting a bounce back up to the 5-day. At this point, the 5-day is still holding. If we zoom out, this is a really critical level. We're starting to break below this 50-50, this 51 area, depending where you want to gauge based off 3 bottoms, based on a spike low. There's a lot of different ways you can kind of get the gauge on what's going on, but more or less we're flirting with the market closed below that level. Today it's having a knee-jerk reaction. The question is this the kiss goodbye? A lot of times the market will do this. It'll break down, it'll bounce back up, kiss that resistance level goodbye, and then completely collapse and move lower. So we'll see how things go. Overall, it's really tough to want to short crude simply because it's fallen like 20%. It's at support, and it's just had such a huge move. At any point, it could have a knee-jerk rally to the upside, and that's the hard thing about these high momentum moves is you're really jumping on a rocket ship that's almost out of fuel, but you don't know, and usually it has the most speed right at the end, so it could just completely straight line down, or it could straight line straight up, And it adds a lot of risk when it's this overextended and that much momentum without any real correction other than a 1 day pause in price before continuing to fall. So that's kind of where it's at. And ideally, we'd like to see some type of bearish formation form, something that gives a little comfort that it's consolidated, and then either try and get a short inverse position on a topping candle or on a new fresh breakdown when it's got fresh momentum for a downward collapse there. Anyways, that's it for this morning. I'll talk to you in a little bit. Bye-bye.